Imagine this. You live in Europe. You buy fuel from the Middle East. You buy electronics from Asia. But the money used in all these trades is not the euro, not the pound. It's the US dollar. Today, we'll explain how the US dollar controls the global economy using simple language and real examples, and how this affects America, the UK, and Europe. After World War II, most countries were broke. The United States was not. The US had the strongest economy, most of the world's gold. So countries agreed to trust the US dollar. For many years, dollars could be exchanged for gold. Later, gold was removed, but trust remained. Today, over 80% of global trade uses US dollars. Oil, gas, food, and raw materials are priced in dollars. This system is called the dollar system. Let's say, Europe wants oil. The UK wants gas. Japan wants fuel. Almost all oil is sold in US dollars. That means, even if you're not Americans, even if the US is not involved, you still need dollars. So countries must earn dollars, borrow dollars, or keep dollars in reserves. This already gives the US huge power. United States, the US prints the dollar. This means the US can borrow very cheaply. The US can spend more than it earns. The US can run massive debt. If another country does this, its currency crashes. When the US does it, the world absorbs the cost. This is a special privilege. The UK uses the pound. The pound is strong but not global money. So, UK imports priced in dollars become expensive. If the dollar rises, UK inflation rises. The UK must watch US interest rates carefully. When the US raises rates, the UK often feels pressure to follow, even if its economy is weak. Europe has the euro, a strong currency. But Europe imports energy in dollars, trades globally in dollars, depends on dollar-based banks. During crises, European banks often need dollar loans from the US Federal Reserve. Even Europe depends on the dollar system. When the US raises interest rates, the dollar becomes stronger. Money flows into the US. Other currencies weaken. This causes higher prices outside the US, debt problems in other countries, pressure on foreign economies. A decision made in Washington can raise rent in London, raise fuel prices in Europe, crash markets in poorer countries. This is real power. Because most global payments use dollars, they pass through US banks. This allows the US to block payments, freeze reserves, cut countries off from global trade. Even if a country is not at war with the US, it must follow US financial rules. This is financial control without soldiers. So why does the world accept dollar dominance? Because US markets are deep and liquid. US banks are trusted. There is no real alternative yet. The euro is divided. The pound is too small. China's system is closed. For now, the dollar wins. The US dollar is not just money. It is power. It shapes trade, inflation, debt, and everyday life. Whether you live in the USA, the UK, or Europe, the dollar affects you even if you never touch one. And the biggest question is not how strong the dollar is today, but what happens when the world stops trusting it tomorrow?